So Hims and Hers stock, unbelievable. We're keeping up the trend. I like doing this video title whenever Hims brings out earnings and we do a review on the YouTube channel. It's the one that I've been using all the time since I've been really investing in Hims, and once again the earnings were unbelievable. They're excellent and I'm really impressed as a shareholder. And if you're on the Patreon and the Discord, you would have seen last night there was a little bit of a party once again, a bit like DraftKings all over again when these earnings came out. I think everybody was happy with them. And a little bit of off topic. I'm using a new camera today, so I'm hoping the quality is a little bit better, so let me know in the comment section what you think. But yeah, getting back onto Hims and Hers earnings, absolutely unbelievable once again. Fantastic company. I'm really excited for the future, and as I've always said, I thought this stock should be without doubt $10, and it looks like today it could be going over the $10, and I think that potentially really a realistic valuation that this one should be at now is towards the end of the year, towards that $15 mark. So we'll see what happens. But on the share price, it is moving up and down a little bit. It was up quite a bit at one point. I think it was over 16% up, and then it dropped into the 9% range. So it's around that 10-15% range. I think the big thing will be when the market opens, and depending on if the market's green, we might see it go a little bit higher. If it's a red, we might see it go a little bit lower and give the gains away, which would be unbelievable to see. But we'll see what happens. Obviously, I'm recording this, and probably by the time you guys see this, because I've edited it, you'll know what that share price is doing. So yeah, I might look an absolute idiot, but that's what probably looks like it's going to happen at the moment. So anyway, enough of that. Let's get into these earnings. Let me dig out some of the things that I really liked about the earnings, and as always, if you can smash the like button, that's absolutely amazing. So revenue growth is obviously key with this stock, because it is a growth stock. We still want to see good revenue growth, and that's what they achieved. They grew at 97% compared to what was expected at 90%. Now, if you saw my video yesterday, I said that actually this is really tough numbers for them to beat, but they did a good beat, which we all wanted to see. So that was really key. Now, obviously, the big thing that Wall Street are focusing on at the moment, and a lot of investors are focusing on, is profitability. So probably we still wanted to see good amounts of revenue growth, but we wanted to see the focus on profitability, and that's what we know Wall Street is focusing on at the moment. And I've got to say, with the share price up only 10% at the moment as recording this video, I thought that with an earnings, we've seen okay earnings and share prices pop up. I thought with these earnings that we potentially could have seen the share price gone up even more, which I was quite surprised to see. But anyway, that's going a little bit off topic again. So revenue growth was key, but we wanted to see focus on profitability. The big one was to see EBITDA adjusted profitability this time round. That was the big thing. We wanted to see the losses start coming down, and also adjusted EBITDA start turning positive, and that's what they achieved. That's really important, because we don't want to see them burning through cash and moving now to profitability, and hopefully gap profitability as well moving forward. So I think they will potentially achieve that this year, so we'll see what happens there. But they did hit adjusted EBITDA profitability, which was fantastic. They also gave Q1 guidance. Q1 guidance was actually very, very strong. This was probably the best part of in my opinion, the earnings that they gave out, is how aggressive that was above analyst expectations. If you look at Q1, they guided for a range of 175 million to about 180 million, and the consensus was around 160 million. So this is insanely higher than what's expected. We're talking over 20, even potentially more than that, 20-30% higher than what was expected on the guidance. So this is significantly above what was expected. Now, the big thing we know about Hims and Hers, they tend to very much sandbag numbers and then over deliver. Now, the crazy thing is they've massively hiked up their guidance in Q1, and the thing is they potentially sandbag their numbers. So realistically, we could expect Hims to probably come at the higher end of 180 million, and we could potentially even see them come around that maybe 185 million-ish. So if it comes at that sort of range, that's scary how good that is. So yeah, that was probably the most impressive part, is the revenue guidance in Q1. They also gave guidance for 2023. They gave 735 million to 755 million. And that was versus the 726 million as expected, which we showed yesterday. So this is once again a really big hike up, as you can see here, from what was previously estimated. Now, I've got to say, I think, like we just said, sandbagging numbers, I think this is massively sandbagged. I think they're going to achieve more than that. When you talk about they're potentially going to come in at 180 million in Q1, I would expect that to, as Q2, Q3, Q4 goes on, I would expect them to push above the 200 million in revenue, probably towards the 220, maybe 230 million in revenue by the end of the year. I think it's going to be higher than this. I think we're going to be talking, Hims and Hers will be pushing towards 800 million in revenue by the end of this year. So I think this has a lot of room for upside. I think they potentially could come in, talking nearly 10% higher on the revenue. And even then, I would not be surprised to see Hims and Hers actually come above my estimate. So yeah, that was obviously really good to see, and I still think there's some sandbagging going on there. This is what surprised me, they came in with a very long forecast. Now, the long-term forecast was for 2025 revenue to be at least being one of the key words that was used there. 1.2 billion in revenue. I think they'll come above that. I think we could potentially looking at 1.5 billion in revenue. Now, that is quite long term, so there's a lot of factors that can change from 2023 to 2025. And sometimes companies do make a rod for the backs a little bit when they do come out with this long-term guidance, because a lot can change. And in fact, when you look at that point of view, like in 2025, you could easily see Hims and Hers like maybe potentially make an acquisition. They make an acquisition, and that totally changes the revenue. So a lot can change in that 2-year time frame. Competition might come in, but I would expect them to get to 1.2 billion in revenue by 2025. But realistically, I think it'll be a lot higher once again, sandbagging numbers. But brave of them to come out with this guidance, and if they hit that guidance, which we do hope for, it'll be absolutely amazing. But yeah, we'll see what happens there. And they also said in 2025 they're going to aim for 100 million in adjusted EBITDA. Once again, I think this is very, very low. I think they'll be potentially up towards 150 million in adjusted EBITDA. So obviously that'll be really good to see them start ramping up that adjusted EBITDA. We're moving into profitability as well, and kind of gives us a better path on how to really value the company than when we start working out the factor of, okay, this is the adjusted EBITDA, how much profit are they going to generate off that, and then when we have the profit and the revenue growth, potentially that gives us some better targets to kind of model out where the company should be valued at. And yeah, like I said, I think at the moment, I think that it was only a matter of time when Hims and Hers gets back to $10, which it should do today. I think that realistically we could see Hims and Hers probably towards, I would not think it's too crazy to expect Hims and Hers to be towards a $15 stock by the end of the year. And then I think by the time we move into 2023, if we do start seeing them potentially hit these sort of numbers in 2025, if we do start hitting these numbers in 2025, I have no fear that it will potentially, and I think these are sandbags by the way, which we just mentioned. I can easily see Hims and Hers coming a $20-$30 stock by 2025, and like I said, I think that potentially by the time we move around into 2027, that's where I have Hims and Hers potentially coming a 10 billion company if they carry on doing how they're doing. But hey, that's the long term. A lot of things can happen, but it gives you a good idea to kind of value the company here. What was also good is the average volume was up 18%, so people are obviously ordering more things, using more things when they're getting on the Hims platform, which is what you want to see. So they're getting on the platform, buying more. The only negative that I saw from this earnings was the wholesale. The wholesale was down 5%. Now this does have on some knock-on effects onto the business. So the wholesale is lower margin, and it's not a key part to the business. The main thing for having the wholesale business is that, let's say they sell their products in Walgreens. People go into Walgreens, they see the Hims and Hers brand. Really recognised products, it's in Walgreens. And then people see them advertising, they do these health services. Oh, you know what? I've seen their products in Walgreens, so I'm going to go use their product online because I trust them. If they're selling in Walgreens, I trust them, I use the product. And it's more for that kind of brand recognition more than anything. Now, wholesale was down 5%, and you've seen that retail sales have been a little bit poor in these sort of companies, so there's not a shock there. But I would have liked to see it a little bit improved. Now, when they were questioned about this on the conference call, basically they said that they, actually I don't even know if it was an analyst, I think it was actually mentioned by the CFO. Basically the CFO said, we have basically at the moment feel like we've maxed out our potential expansion. We're in basically everyone that we want to be in, like CVS, Walgreens, for example. Now, I can understand that point of view, but I think there's always some areas that you can look to expand or adding more products onto the shelves. So I don't think it should be decreasing like this. I think it should still be growing it a little bit. Not that it's not a major issue because it's not a major part of the business, but I would like it to still move positively in the right direction. And we've seen before, like I've been in companies before where you add more SKUs and you add more stores and then it doesn't translate into revenue or sales. So sometimes adding more SKUs, pointless SKUs or pointless products sometimes doesn't give you any benefit as a company. In fact, it hurts you as a company. So I'll trust this one on management, and they are making the right decision. I think, there's no point expanding there. But hey, just something that I pointed out that was only the little negative that I saw here. Now, the great thing is actually wholesale has lower margins, so it does drag the lower margins down, and because wholesale wasn't really growing that much, as well as some other benefits, and they had really good gross margins. Gross margins went to 79% compared to the last quarter, or the last Q4, which was 73%. So this is a major increase in the gross margins. They did say that they expect this. I think the forecast is for 75% gross margins going forward, so it should decline a little bit going forward. I don't know if that's management once again just sandbagging that gross margin impacts just to be on the cautious side. But yeah, same again, like that was a really good increase. Normally we'd say if gross margins goes up like 1-2%, that's really good. But this is a major increase, which is really good. There was the drop in hints of new product expansion, which we want to hear, and I'm sure they are. They're going to continue expanding into the TAM. They're in the healthcare TAM. There's major TAMs in there. The whole healthcare is a TAM, but when you start breaking it down into the actual market opportunities, there's so many easy markets for them to go into. Obviously, they said that as you can see, there's no macro impact going on. Considering the tough environment that we're in at the moment, people are still using Hims and Hers, and obviously healthcare is key. People are still going to be bothered about their health even in a tough market, and in fact, if anything, affordable healthcare, it's only going to be probably more successful in a really tough macro environment. So clearly doing very well from that point of view. And I just look at something like Hims and Hers, and you look at how good the platform is, you look at the reviews, you look at how cheap the platform actually is to use, and you're thinking realistically, like when you even look at the UK and how bad the healthcare system at the moment is in the UK, which is a topic I'm not going to get too much into because there's a lot of opinions on it. But you look at something like Hims and Hers and you think, well, if you had a very cheap, affordable, reliable platform that even moved into the UK, there's so much international expansion potential for them as well going forward. But yeah, obviously that was great. The last point I want to make, the Q&A session I didn't think was actually too amazing. I didn't really get too much out of the Q&A session for this conference call. I felt like most of the analysts were just asking questions on CapEx and gross margins. That I generally think half the questions were on gross margins, which is not great. I mean, there's questions about like acquisitions potential. They didn't give much away on if they were looking at an acquisition. But what did impress me is how long the Q&A session were. Normally Hims and Hers Q&A sessions previously, I think, have been like 40 minutes. The conference calls have been about 40 minutes long, and this went to about an hour. And from the tone that I got, it felt like the operator just went, we're an hour in. That's the end of the Q&A session. That they can't take any more questions now. Like, generally, most companies do stop the Q&A session or the conference call after about an hour. So it sounded like there were still people piling up to ask questions about this, but the names as well that were in the conference call, how many questions there were, it seemed like there was a lot more analysts starting to get attracted into the conference call and asking questions. So that's a great sign, that clearly, and it seems like that in the last few months there seems to be a lot more awareness now of Hims and Hers. A lot of analysts on Wall Street are starting to know about the company, and they're starting to get attracted into the company. And obviously when they are delivering the numbers that they are doing with this revenue growth while getting EBITDA profitability and setting out these long-term targets that are very ambitious but will be amazing if they hit them, it was only a matter of time before this stock came more aware and it started getting reflected on the share price. And it had that tone to the conference call where there was definitely a lot more questions and a lot more major institutions that were on there asking questions about the company and what they think going forward. So I thought that was actually a really, really good positive as well that I kind of took away there. So that's Hims and Hers. Unbelievable once again. Really, really good earnings from them. And yeah, I'm excited where this one carries on going in the next few years. So I hope you enjoyed the video. Well done to you guys, the Hims and Hers shareholders. Well done to anyone that really capitalised on this stock in that $5 range, $4 range, $3 range. I think it actually went to $3. So yeah, well done if you capitalise on that opportunity, and catch you in a bit.